You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, and welcome back to the Infinite Banking Mastery Podcast. Last episode, we talked through how long-term care policies work, what triggers your benefits, what the elimination period means, benefit amounts and inflation riders and what that means, and the Washington CARES Act. Today, we're getting into some information that may be new to you. Of course, all of this information could be new to you. But for example, some policies offer a cash benefit option. The benefit is paid directly to you, and you can choose to use it to pay a family member to provide your care, for example. Most conversations I have with clients are that they don't want to burden their children, that they want their independence, and coverage can certainly come in handy in a situation where you may have to move in with your kids. If they're willing and happy to have you, hopefully, it can be incredibly helpful to be able to hire additional help for part of the day, especially during the hours while your son or daughter might be working. That would take a lot of the pressure off for them. But if paying a family member is something that's important to you, here's what you need to know. Your paid family member will become a household employee. That means you will need to handle employer tax obligations, L&I taxes, Employment Security Department taxes, and sending them a W-2 every year. And of course, your child will also owe income taxes on what they receive. The benefit will come to you tax-free, but if you pay a family member, they become your employee and their earnings are taxable. Also, not all carriers offer this option. Some have eliminated it due to concerns about elder abuse and fraud. Of course, there's always someone out there ruining things for everybody. Something that was meant for good gets abused and people get hurt. It's pretty lame. Another thing you might not be aware of is that many policies also cover home modifications. Things like grab bars in the shower, a wheelchair ramp at the front door if you're wheelchair bound, safety rails in the hallway or wherever you have stairs, walk-in tubs or showers, and other modifications to make your home safer and more accessible. So if you happen to have a parent right now who has a long-term care policy and is beginning to need help, you should call their insurance company and ask if their policy includes home modification benefits. Most families don't even know to ask this question, and those costs may well be covered. And here's something interesting that nobody really talks about: how long-term care claims tend to spike around the holidays, because many families aren't even aware of how much mom or dad has declined until they are visiting or visiting for longer than an hour or two. Your parents most likely won't want to worry you and will tell you they're doing fine anytime that you discover that they're starting to need help. And of course, you will have no idea until you actually see them and spend time with them. Something big that I've heard of a lot of parents not wanting to admit is when they shouldn't drive anymore, or they don't want to admit that they can't remember to take their pills, or that they shouldn't be cooking anymore. Of course, they want to be able to do those things, and it's sad to lose independence or lose your driver's license or not be able to drive. It's very sad and something that you need to be paying attention to and aware of and help them when that need arises to stop doing those things or to get help. And remember that young people are not immune. The Alzheimer's Association estimates that about 200,000 Americans under 65 are currently living with younger onset dementia. And that number is expected to grow significantly. Yikes. Another concern is that strokes happen at younger ages. Cancer can strike at any age, and treatment can leave someone too frail to bathe, dress, or move independently. You could have an accident at any time. You could be a healthy, active, young person on a ski slope and have your life changed in an instant. We actually have a very, very good friend whose whole family is incredibly outdoorsy. And I mean incredibly. Our friend has gone camping in the snow and built an igloo to stay in. He's done all kinds of things with his family that I would never do. I do have a son who probably would like to do those things, but he's going to have to join that family if that's the case, because I am just not that cool. Well, this friend of ours, his equally outdoorsy son, had a job at a ski resort at the top of a mountain. He was skiing down after work one day and went into a head-on collision with someone else. It was so overwhelmingly devastating. We couldn't believe it. Now, this young man has a tremendous spirit of strength, and he has persevered through all his surgeries and is doing amazingly well. Though he did end up losing an arm, he is handling it very, very well. And this all happened in his early 20s, with his whole life ahead of him. We are just so amazed at how strong he has come through it, but not everyone would come through the same way from that kind of accident. During your working years, a disability policy can help cover income if you can't work, and you can add a catastrophic rider to that policy that would be triggered in the same way as long-term care coverage is triggered. And if you had that policy and you had a long-term care catastrophic rider on that, and it triggered because you were unable to perform 2 activities of daily living, then you would receive a higher benefit because you'd have your disability benefit, and then your catastrophic benefit would pay to increase your total benefit to help you pay for help during that period of your life. One thing that you'll want to keep in mind is that you will eventually age out of a disability policy, which is why having a dedicated long-term care plan makes sense and why you shouldn't put it off until you're in retirement or nearly there. I'm not saying this to downplay the importance of disability coverage, because it is very, very important, but just to point out that long-term care will continue to be important even after your disability policy expires. Another thing to keep in mind is that we are at the very beginning of baby boomers reaching the ages where care is truly and urgently needed. Demand for care is expected to surge in the next 5 to 6 years. The question is, will there be enough providers and facilities to meet the demand? If supply can't keep up, and early signs suggest it will be a struggle, costs will rise further. Good old supply and demand. There's definitely a growing shortage of professional caregivers. More assisted living communities are being built, that the industry is racing to keep up. I have a good friend and client who owns a home watch caregivers franchise, and he's always saying he needs more caregivers. Does anybody know any caregivers? Who could you send to me, because we need to hire people? There's already a shortage, and they're doing what they can to teach people and get more people out there to care for our elderly who need help. And I don't know if this is good news or bad news, but maybe you've heard about how Elon Musk believes we will all have a personal robot someday that can help with care, that can help clean the house and cook for you and help in all sorts of ways. We will all have our own Rosie the Robot, for those of you who remember the cartoon The Jetsons. With how fast AI is advancing, I can very well see this being our future, especially since we will be at a shortage of caregivers. And this is something that my friend mentioned as well. He said, we're all going to end up with a robot. Interesting. So when should you buy coverage? The ideal window to purchase long-term care coverage is around the ages of 55 to 65, when hopefully you are still healthy enough to qualify and premiums are still manageable. The denial rate for coverage jumps from 30% for people ages 60 to 64 to 38% for people ages 65 to 69 to 47% for ages 70 to 74. So you want to get that coverage locked in while you're still able to qualify for it. By waiting, you are betting that you will stay healthy, and that is definitely a risk. So again, if you're looking into it younger than age 55, there's certainly no harm in that. It's possible for you to lock in a lower cost, and if something catastrophic were to happen to you before you reach your retirement age and you were to trigger benefits, well, at least you will have some dollars coming in to help with the cost of your care and to keep you from draining your retirement funds, especially because you may recover and live a long time in retirement. You don't want to drain those funds. Long-term care is the one risk that can take everything that you've done right and undo it all. But if you have the right coverage in place, you don't have to watch your retirement funds dwindle away in a hurry. You can protect your cash flow, preserve your assets, and make sure a health event doesn't hollow out everything you've worked hard to build. So if this series on long-term care has gotten you thinking, well, that's good. I'm here to help. If you decide you would like to partner with me, I would be happy to help you figure out what the right coverage is for your specific situation. And if you're wondering how to tie this in with a policy for the infinite banking concept, I would be happy to help you think it all out. You can reach me at valerie@alphaomegawealth.com to schedule an introductory meeting. And remember, the best time to plan for this is always before you need it. Once you need the coverage, you won't be able to get it. All right, I hope you have a wonderful week.
This is thepodcastfactory.com.